Hello, everyone. Thank you for joining today's Connecticut Green Bank Spring Quarterly Update webinar. We are nearing the end of Earth Month, so happy Earth Month to everyone. Hopefully you all had a good Earth Day last week, and again, we thank you for joining us today. My name is Rudy Sturck, the Director of Marketing and Communications for the Green Bank, and I will be joined by a number of my colleagues on our presentation today, who I will introduce as we go forward. First, a few housekeeping items before we get started. We are recording today's session, and we will send out a follow-up email to everyone who registered with links to the recording and other resources that will be mentioned along the way. We will first start with a few organizational updates, and then we will talk about some specific solution line related updates at the program level. And then we will have time at the end of the session for Q&A. So please enter your questions into the GoToWebinar question box at any point during the session, and we will do our best to answer them at the end. If there are questions that we don't answer at the end or questions that require more direct one-to-one response, we will reach out and follow up with you after today's webinar. So with that little bit of housekeeping done, I will now turn this over to Green Bank President and CEO, Brian Garcia. Brian?
All right. Thank you, Rudy. Thank you for that introduction and getting us off and running here. Let's go ahead and go to the next slide. Perfect. All right. Good afternoon and good morning, everyone. We always like to start this by providing a high-level overview of the Connecticut Green Bank, given that we have many new members to our audience quite frequently. We are actually the creation of a public Act 1180 in 2011 created the Connecticut Green Bank. Our mission is to confront climate change, and we do that by increasing and accelerating investment. So investment is a really important input into Connecticut's green economy. So that investment, we like to use a little bit of public to mobilize multiples of private, and then that ultimately allows us to create more resilient, healthier, and equitable communities. So we have a number of impact reports that we like to issue as a result of that investment, leading to more clean energy deployment leading to economic development, environmental protection, energy equity, and now ecosystem services benefits. So that is our mission. Let's go to the next slide. Our goals are to leverage limited public resources to scale up and mobilize private capital investment. So when people think about green banks, this is typically the key thing that they think about is a nonprofit, a government agency using a little bit of funding to attract and mobilize multiples of investment on top of that from the private market so that we can achieve the ambitious targets that we're after. We also pursue investment strategies that advance market transformation in green investing. We're going to have an update today on our Honeycomb Green Liberty notes, which reflects that goal. And then lastly, as a result of all of that investment, we help strengthen Connecticut's communities, especially our vulnerable communities. Vulnerable communities is a definition that arose out of Public Act 20-05 and includes things like low to moderate income communities, Community Reinvestment Act eligible communities based on the 1977 federal CRA. So we want to focus more investment in these types of communities. CRA is important because it gets our FDIC insured banking partners investing in less than 80% area median income census tracts, which is really important so that everyone can benefit from the green economy. Okay, let's go to the next slide there, Rudy. We've got a number of solutions and our team is going to work through these today as part of our update from home solutions, including our energy storage solutions program and our financing programs like SmartE. We've got building solutions, community solutions. Several of these, again, are going to be provided updates today during this quarterly webinar. Let's go to the next slide. So a couple of things I just wanted to highlight this quarter that has occurred. The first is about a month ago, we had our annual awards and we just wanted to highlight a few of the award recipients. Let's start off with our Chairs Award. So Chair Lonnie Reed is the chair of the Connecticut Green Bank. This year, she provided the Chairs Award to Amalgamated Bank. Many of you out there know that Amalgamated Bank is known as America's socially responsible bank. They have a long history of making financing accessible to all and supporting nonprofits, labor unions, advocacy groups, and others. Amalgamated Bank was actually born in the 1920s from labor organizer Sidney Hillman and the leaders of the Amalgamated Clothing Workers of America. Their mission centers on empowering organizations and individuals to advance positive social change, which includes environmental justice. So we have a number of initiatives that we've been participating with and investments with Amalgamated Bank over the years, including our partnership with Eversource on the Small Business Energy Advantage, where Amalgamated Bank has purchased cumulatively over $100 million in loans through that program. So just a big kudos to Amalgamated Bank with the Chair Award. The second one we wanted to highlight is the President's Award. I get to give this award out as well. Last year's awardee was Lynn Stoddard, the founder of Sustainable CT. This year, we wanted to recognize Susan Auslander. Susan is right there in the green. She is a resident of Meadow Ridge, which is a senior assisted living center. She championed the case for installing solar to the property management company of the center. Ultimately, Verigy did a great project. It is a carport project, 763 kilowatts, financed through CPACE. They are going to save $7.6 million in savings over the life of that project. So if we want examples of people working within their housing to get the management to support clean energy, in this case, a carport, look to Susan. She is fantastic. And then, of course, right next to her is CC Marr from District 26, State Senator CC Marr, and State Representative Ann Hughes from the District 135 in the House there to her right. So we're honoring Susan and her wonderful work. If you Google it, you'll come up with New York Times articles and just things that she's been doing that really reflect what citizens can act and push and advance within our communities. Then the third, we've got right there, Mr. Andy Bauer. I've known Andy for years. It was great to see our team recognize Andy Bauer. He is known widely in our clean energy and sustainability movement for decades. He led the steering committee for the town of Portland's Clean Energy Task Force, and he has done that since 2005, which is where I got the opportunity to work with Andy over the years. He's just an extraordinary individual. I often say that if you can recreate an Andy Bauer in every community, you would have solutions all across the state that would be at scale in our clean energy economy. And he's surrounded there by his family. So it's great to see Andy. And then lastly, we have many winners. So these are just a few of the winners. Just wanted to call out, but there's many of them. Also wanted to recognize Commissioner Selah Mosquera-Bruno from the Connecticut Department of Housing and her team, which has just been an exceptional partner with us, DEEP, the Connecticut Housing and Finance Authority, PURA, as our legislators in 2021 passed Section 2 of Public Act 2148, effectively opening up the residential solar market to more multifamily affordable housing. Selah and her team have been instrumental in unlocking that market and creating a space where we can help tenants realize the value from on-site clean energy. So just a big shout out to the commissioner and her team. Again, many winners here, but wanted to give a shout out to a few of them. Let's go ahead and go to the next slide. Last week, we had the great fortune, actually on April 24th of 2019, 6 years ago, Governor Lamont signed his first executive order, EO1, which was all about greener.gov. So yesterday reflected a number of years of very hard work by the Department of Administrative Services. We see Commissioner Gilman there, by the Department of Corrections. We see Deputy Commissioner Carlos there and her team, Chris and others who really worked steadfast with our team over the years to ensure that we could deploy all of these ground-mounted solar PV systems at facilities across the state. So we've got the governor there, the lieutenant governor, we've got Alex from Total Energies there, our financing and project development partner. So there are 7 sites that we announced last week, totaling, I believe, 8.4 megawatts of solar installations. And you could, of course, see from that, we expect over the 25 years of those power purchase agreements that the state will save over $11 million in avoided energy costs. It was a great day at the celebration. The press asked Chris, the facilities leader for the Department of Corrections, how much those facilities were supporting that facility in Cheshire that day. And at that moment, it was providing 85% of the load of that facility. So it's great to see here our state leading by example in Governor Lamont and team advancing greener.gov. Literally 6 years to the day when Commissioner Dykes was there with the governor to sign Executive Order 1. So great to see all of that be put to work. So with that, Rudy, I'm going to turn it back to you, and we'll have the team work through our different channels. Thank you.
Thank you, Brian. Now we are going to move into our home solutions, which, as Brian mentioned, includes energy storage solutions and the Smart E loan. Now I'm going to ask my colleague Ed Kranich, the Senior Manager of Incentive Programs, to provide an update on energy storage solutions. Ed?
Hey, Rudy, can you hear me okay?
Yes, sir.
All right. I'm having a little issue with my camera. So I'll jump right into energy storage solutions here. So thanks, Brian, and thanks, Rudy. So just a quick overview before we get into the details about how the program is doing. So Energy Storage Solutions, for those who don't know, is a program created in 2022 or launched in 2022, created in 2021 through legislation and by PURA, the Public Utilities Regulatory Authority. And it's an incentive program that's managed by the Connecticut Green Bank and Eversource and UI that provides incentives for residential and commercial customers in Eversource and UI territories to install battery storage for the purpose of backup and demand savings. And the incentives are paid in exchange for the customers making their batteries available to send power to the grid during peak times during the summer and winter months. So more information at energystoragect.com. So a couple of updates on the program for spring, summer of 2025. So we have an upcoming webinar for building owners. As you may know, if you get our emails, we hold maybe every couple of months, we hold a homeowners webinar to talk to homeowners about solar and storage and how batteries can benefit them. And we're holding actually one of our first building owners commercial webinars next week, May 6th at 11 a.m. So we have sent out some invites and we'll be sure to send out an additional invite reminder to anyone who subscribed to this webinar today. A reminder to anyone who is in the ESS program, the summer 2025 season is right around the corner. So it starts June 1st, and we have a new performance formula in effect that PURA has approved for us as of last December. So we're excited to put that into effect and hopefully see some good compliance from batteries and make sure everyone's providing the grid benefits that are expected for ratepayers. So keep an eye out for that. Some important information, again, if you're already in the program, we have a new DERMS provider. So that's the software solution that controls the batteries, that sends the signals to and from to trigger these dispatch events. We have a new provider for Eversource commercial customers and for all UI customers called Uplight. So there will be some information coming out, but on May 6th, those customers are going to be transitioned over from the Energy Hub platform into Uplight. For most customers, this doesn't really mean much for them, and they don't have to sign anything. They don't really have to do anything. It won't really change anything for the way their battery is performing. But just know there may be some, maybe a day or two service interruption or delay for getting projects loaded in and, you know, getting things completed so that projects can get paid out. Shouldn't cause too much of a delay though, we're hoping. And then finally, updates before we get into you know, kind of how the program overall is doing. What we've seen, you know, for trends over the last couple of months this year is a pretty significant increase in system sizing. So that's, I think, thanks a lot to the equipment that we've approved, which I'll get into on the next slide. We've seen a lot of new commercial and residential equipment coming online that has much higher power that, you know, we're excited for homeowners, especially who want to power their heat pumps and their EV chargers when the power goes out. So system sizes are increasing while costs are either staying the same or coming down slightly. So, you know, we're excited to see trends moving in the right direction. So next slide, please. All right, so program progress and kind of where we are as of this morning. So we're actually coming pretty close to our first 10 megawatts, hoping by probably midsummer, maybe by the end of summer, we'll have reached the first 10 megawatt block of the residential incentives. So we will then be moving down to the lower incentive rate, which is exciting. We're a little bit behind schedule here, but we're still moving along. So, you know, big appreciation to our contractors out there who are making all this happen. So we're at 890 units of housing, and on the underserved low income side, we've got 345 housing units, including single and multifamily, for about 2 megawatts. On the commercial and industrial side, things have been moving a little bit more slowly than they had in the past, but we're up to 71 buildings and 150 megawatts in total. We have lost a few projects over the last few months due to interconnection issues and just general, you know, siting issues that can happen early on in the development process. But we have approved some new projects and we have plenty of capacity in our current tranche right now. And finally, as I had mentioned, we have some exciting new equipment that's been approved from AESI, SolarEdge, Elm, and Fortress. So check out energystoragect.com for more info to see our full list of equipment and contractors and resources, and our upcoming contractor trainings. Again, you can find links to those on the ESCT website. And finally, just to plug, I don't have a link for it here, but our annual review with PURA is coming up starting, it's due in August, but it really kicks off in the beginning of June. So if you're a contractor, developer, building owner, anyone who really wants to participate in this program and you have ideas or thoughts on how you want the program to work or maybe how you want the program to change, we highly encourage you to join the public comment process with PURA. And if you have any questions on how to do that, how to join, how to become active in the docket, feel free to reach out to us, energystorage@ctgreenbank.com. So with that, I will turn it back over to Rudy.
Thank you, Ed. Appreciate that update there. So now I will provide an update on the Smarty Loan, which is our flagship program for homeowners. It was launched in 2013, and it offers low interest financing in terms up to 15 years for homeowners trying to make improvements to their home. It's now helped more than 9,000 families across the state improve their energy efficiency, increase their comfort, or become more resilient to climate change. The loan is offered through a network of lending partners, including local banks and credit unions. There are currently 6 in the program. And the financing is offered through more than 300 contractors across the state. Currently, this year, the loan has done roughly $16 million in loans to families in Connecticut. We're quickly approaching the $200 million total investment mark for this program. So it's a nice milestone to be approaching, and that's in large part because of the lenders and contractors in the program. It's also worth mentioning here that the program was originally only for home projects related to heating, cooling, energy efficiency, solar, projects related to energy, but now it can be used for roughly 90 different types of projects. Last year, Smarty was expanded into the climate resiliency category. Last year, right around Earth Day, actually. And this category includes things like storm protection, flood proofing, improvements to drinking water quality, so replacing lead or galvanized pipes, improving private wells, re-drilling wells, or connecting to public water. Landscaping related projects, so if there are dead or dangerous trees that are threatening your home, or planting native or shade trees. And the newest enhancement to the program was replacement or repairs made to septic systems. So all of these are now able to be financed using Smarty. We are actively working to spread the word to homeowners and our partners about this expansion. And we're working hard to bring contractors into the program that focus in these areas. So if anyone hearing this presentation knows of any contractors in these areas of expertise, or know homeowners that need these type of services, please reach out to us. We would be happy to welcome them into the Smarty program and have them be part of our contractor network. And finally, we do want to just say, as always, a thank you to all of the participating contractors. The network of contractors continues to grow, and we appreciate the support that you provide to this program and the great service that you provide across the state to homeowners using the Smarty loan. So now we will shift from homes to buildings, from residential to commercial, and I will turn this over to my colleague Elise Lembo-Buzelli, the Director of Program Development and Origination on the Financing Programs team, so she can talk about CPACE. Elise?
Great, thank you, Rudy. Good afternoon, everybody. Thanks for joining us. So today I'm going to talk about the CPACE program that the Green Bank administers in the state of Connecticut, as well as lends in this program. So first slide here is just a quick reminder of what CPACE is. For those that are new to our webinars, I'll give you a quick overview here. So CPACE is an acronym. It stands for Commercial Property Assessed Clean Energy. So as the name implies, we're able to finance projects for commercial properties to do green solutions. And that includes a lot of different things, including energy efficiency upgrades and renewable energy upgrades. So things like lighting upgrades, HVAC improvements, building automation systems, as well as things like solar PV, combined heat and power projects, etc. And the financing is available to commercial properties, which include pretty much anything that isn't a residential property, 1 to 4 units, which Rudy just covered. We have our Smarty program for that. So really anything that isn't a residential property or a state or municipal property would be eligible for CPACE. So that includes things like office buildings, industrial facilities, warehouses, retail. It also includes multifamily properties. Anything 5 units or greater is considered commercial. So that would fall under the commercial category and would be eligible for CPACE, as well as nonprofit organizations. So that includes things like houses of worship, community centers, theaters, museums, all of that would fall under the commercial umbrella. And you'll see here that it says green solutions, and a few of you that maybe have known about this program for a while would recall that we were really focused on energy. But Rudy just mentioned this again, and talking about Smarty, we've since expanded our goals and our mission to include other solutions And for the CPACE program, that includes financing for EV charging infrastructure as well as resilience improvement. And we'll be talking about the EV charging infrastructure option here in a few seconds, but lots of opportunities for property owners to finance through this program. And this is a long-term funding option for property owners. So as this program was designed, and again, designing it for clean energy, we understood that it's not always going to be, you know, a 3-month return on investment when you're looking at something like a solar PV project. Sometimes it takes a little bit more time than that to realize some of your savings. So in order to make that easier and a better cash flow scenario for property owners, we are able to offer financing for up to 25 years for these projects. So really what that does is it allows property owners to make small payments on a yearly basis over a long period of time, and therefore actually realize some of those energy savings that they're getting from the improvements that they're installing on a yearly basis. A lot of our projects are even cash flow positive in year 1, which is really great, very beneficial. So allows property owners to make those upgrades, especially some of those deferred maintenance upgrades, like, you know, mechanical systems, for example, things they need to make their building work. You know, they can be financed through this program. And it is a little bit different than a traditional construction loan that you may get from your local bank down the road. Aside from the long-term funding options, it's also secured with a benefit assessment that gets placed on the property. So not like a traditional loan where you would maybe have to, you know, you take out a 5 or a 7, maybe a 10-year loan, have to put some money down. And then, of course, if you decided in year 3 of your 10-year loan with that bank that you wanted to move your business to a new property and sell your building, you would have to make sure that you paid off that loan before you moved. Because it is a benefit assessment, that assessment is going to remain with the property along with all of those energy improvements that you made and all of the savings that go along with them. So again, a little bit different than a traditional construction loan that you might get to do some of these projects, but really beneficial, especially in the long term for both the current property owner as well as a new one that might come in, and still be able to enjoy the benefits of a cleaner, more comfortable, better operating building that is not as expensive to run as one that maybe didn't have those energy improvements. All right, so that was a quick review. And then just to give you all an idea of what the CPACE program has done so far. So the program launched in 2012, and we started closing projects in 2013. So what you're seeing here is just cumulative closed projects over the last couple of years, over the last decade or so. This is as of the end of the calendar year 2024. So we were almost at 415 projects at the end of the year. We're about there now, a little bit over that. And that included a total of $360 million in total project financing. I mentioned at the beginning that the Green Bank is both the administrator of this program as well as the lender in this program, or a lender in this program. We, along with about 20 other approved capital providers, are eligible to lend. So these projects that you're seeing here, total amount financed, total number of projects, this is helping over 400 different property owners. And you can see here it's also giving the opportunity for over 100 different contractor companies to work in this program and close projects, which is, I think, a really compelling number. You know, that all of these different companies are able to utilize this program and use it to help grow their business. And that also includes over a dozen different private capital investors that were able to finance CPACE projects in the state. So again, bringing a lot of different benefits to our key stakeholders here and our building owners, our capital providers, and our contractors. And then quickly, just to talk about the couple of updates here. So the big one here is the interest rate updates. So I just mentioned that the Green Bank is one of about 20 different lenders. So what you're seeing here on the screen, this is just an indication of the Green Bank financed projects. I want to make sure that's really clear, that these are only the rates for Green Bank financed projects. But what you're seeing here on the left, these are our current rates. We just updated these recently, and you'll see there's two columns here. You'll see that there's interest rates for projects that are $1 million and under. Those range anywhere from 4.5% to 5.45%. And then you'll also see the rates next to those for projects over $1 million. These are the current rates for projects, and these rates are going to be good until June 30th of this year. So we've got about 2 more months of these rates. And what you need to do in order to get these rates is submit an initial application for financing before that deadline of 6/30. So keep that in mind if you're interested in doing a project and you want to get these current rates. The 30th of June is the deadline for those lower rates for the projects that are over $1 million. And then next to those, you'll see the rates for projects after 6/30. So as of July 1st of 2025, the projects for under $1 million, those are going to stay the same. We're going to keep those quite low. You can see they're very competitive in the market today. And then you'll see that the projects for over $1 million are going to go up slightly, about a 0.5 percentage point for every year increment here. But another thing to point out, you can see that all of our interest rates are tied directly to the term length. So it's not really dependent on your credit underwrite per se when we're doing our financial underwriting. It's really dependent on that loan term, which we think makes it a lot easier, especially for our contractors, to talk about these projects and include this financing in their proposals when they're working with property owners. So before 6/30, those are the rates that you've got over there on the left. And then after that, the projects that are over $1 million will go up slightly. Okay. And then the next slide, I think this is my last slide. So just wanted to throw out a quick reminder on this. So on the first slide where I talked about the CPACE program in general, I mentioned that EV charging infrastructure was something that was recently added to the options for financing projects with CPACE. And so we wanted to kind of put that back out there for the market to know that we can do these types of projects. It's been around now, available for probably 2.5 or 3 years, but wanted to kind of reiterate how easy it is to do an EV charging infrastructure project with the CPACE program. So it's exempt from our savings to investment ratio, which means that there's no savings requirement, no dollar savings requirement for EV charging infrastructure projects. If you've worked with us before or you're familiar with the program, you'll know that efficiency and renewable energy projects have a minimum savings threshold that they need to meet in order to qualify for financing. That isn't the case with EV charging. So no requirement for savings. And we can do a loan term for EV charging infrastructure anywhere from 5 to 10 years. And those rates, as you just saw, for projects that are under $1 million are between 4.5% and 4.75%. So again, really competitive rates out there for these projects. We do have a minimum project size of 30,000. So something to keep in mind when you're thinking about the types of EV charging infrastructure that you might be looking to install. But 30,000 is the minimum project size. The EV charging infrastructure project is still eligible for any of the utility incentives. Any of that can be paired with our financing, again, as long as we're above that $30,000 project minimum. And of course, it can be bundled with any other eligible measures or energy improvements. Something that comes to mind, and what we have been hearing a lot in the market, of course, is pairing EV charging infrastructure with solar PV. That's a great option, especially if you're doing something like a carport installation at your property. So certainly encourage the idea of thinking about these EV charging infrastructure projects alongside of your solar PV project. And the last thing here is it still requires an energy audit. I probably should have put energy audit in quotes. It's really not an energy audit per se. It's a data collection sheet where we get some information about the installation itself. So not really an audit necessarily, but information about the project. So of course, we know what we're actually underwriting when we're looking at these. But really wanted to get the point across that we can do these. We hope to see some of these projects come through. If you're interested in learning more about this, please let us know. I'm happy to speak to anybody about this. And I didn't put this on this slide, which was my bad, but we do have an EV charging infrastructure contractor focused webinar that we're going to be doing at the end of May. It'll be May 20th, where we'll focus on how contractors, maybe electrical contractors or even solar contractors that are looking to expand their offerings, what you can do and what you would need to do to offer EV charging infrastructure through CPACE to your customers. So keep an eye out for that invitation. And if you're not already on our list to receive information for CPACE, information for contractors, please let us know. We can always add you to that list. And I think that will do it for me, and I will pass it back over to Rudy.
Thank you, Elise. Yeah, we will make sure that we include a link to that EV contractor webinar when we send out the follow-up, in case anyone listening is interested in learning more about that and how they can offer that to building owners. So now I'm going to provide a quick update on our Green Liberty Notes program. As Brian mentioned at the beginning, we do have opportunities for people to invest directly with the Green Bank. For those who are not familiar with our Green Liberty Notes, these are an investment opportunity that allow really anyone to invest in a one-year fixed interest rate note that supports the Small Business Energy Advantage, SBEA program. SBEA provides loans to small businesses across Connecticut that are seeking to make energy efficiency related improvements. The notes are designed as they're designed as a green bond, and they are designated by an independent verifier, Kestrel, to verify that they are meeting the standards of a green bond. And investments start at just $100. So we did that really because we wanted these to be accessible to as many people as possible. And these investments can be made online through our partner, Honeycomb Credit. We just issued our first offering through Honeycomb Credit's platform last month. It was the 12th offering that we've done to date. This was the 10th consecutive raise that surpassed its maximum raise amount. Now in total, we've raised more than $3.3 million collectively. That has been investment from 43 different states, but the majority of the investors are Connecticut residents. So more than half of those investors are coming from people right here in Connecticut. More than 60% of the investment has been below $1,000, which was a goal and a threshold that we set when we first started offering these notes, because below $1,000 felt more accessible to more people. While we can't be too specific on when the next issuance is because of legal rules, I can say that it's going to be opening either May or June, sometime in that time range. And we'd love to have you be a part of that offering. So if you are interested, you can see there's a website URL on the screen where you can sign up for notifications. You can also learn more about the 12th offering by following the link that's on the screen. That'll take you to the Honeycomb Credit website. It's a very easy process to open a Honeycomb account and invest. If you have any questions about this, don't hesitate. Please reach out and let us know. We'd be very grateful to have you participate in this program when we roll out offering number 13 in the very near future. So with that said, I'm going to hand this back to Brian Garcia for some closing thoughts.
All right, thank you, Rudy and crew. Rudy, that was great on Honeycomb. For those out there, green banks out there, Solar for All, NCIF, CCIA, think about Honeycomb as a partner and think about them in terms of getting people in your community to invest in other businesses locally in your community. Honeycomb has been a great partner. We just started off with them. Of course, they acquired Raise Green and just have extraordinary leadership there. So we're excited to continue to raise money from the crowd and provide opportunities for the crowd to invest in their communities. So just let's go to the next slide, Rudy. A few notable transactions of this quarter that I wanted to highlight. Let's start off with Sungage Financial. Many of you might be familiar with Sungage. They were one of our first investments. Sarah Ross, who was the visionary behind Sungage Financial, just did an extraordinary job setting this company up and getting it off and running and providing families with access to loan capital for solar and storage. Well, we are excited to be working with them to integrate them into our Smart E-Loan program to provide a loan offering specifically in support of the residential renewable energy solutions and energy storage solutions programs. So what Ed was talking about, as well as our residential storage, solar PV program. So we're excited that they're coming back on board. Of course, they have a history with us on crowdfunding, for those of you who might recall. So really excited to be re-engaging with Sungage Financial. Second, the Puerto Rico Green Energy Trust and Nelly Gorbea. We've got extraordinary partners in PR Get. We are, as many of you know, partners with the Coalition for Green Capital. We are a sub-awardee of CGC in their application into the National Clean Investment Fund of the Greenhouse Gas Reduction Fund. One component of our building a green bank in every state across the country, including territories such as Puerto Rico, is that Puerto Rico is a sub-awardee underneath our sub-award, Connecticut sub-award. So we are working with Nelly and her crew to support their development as a long-term green bank for Puerto Rico. So really excited by them. They've got a retreat coming up, and if you're out there in Puerto Rico, good luck with the retreat. We're looking forward to seeing you grow and prosper for the citizens of Puerto Rico. Third, the Community Power Group. Some of you may be familiar with Connecticut's Shared Clean Energy Facilities Policy, otherwise known as Community Solar. We are excited to be working with the Community Power Group on a rural community installation of a large solar project, about 5 megawatts on a farm, whose benefits will inure to Connecticut's vulnerable communities. So Connecticut's Community Solar program delivers subscriber credits to low to moderate income families. So we are happy to be working with the Community Power Group in these challenging times of higher interest rates and inflation to enable those projects to move forward. So not only are we reducing greenhouse gas emissions in a rural community, but we're also helping our low to moderate income families reduce their energy costs through subscriber credits and that policy. This is a project that we're also looking to support through the Greenhouse Gas Reduction Funds, NCIF, and our collaboration with the Coalition for Green Capital. And lastly, just building on Ed's update on the Energy Storage Solutions Program and our commercial and industrial project partners, we are excited to be working with Scale Microgrids, which has acquired a number of projects that are going to be serving the C&I sector for energy storage solutions. So these are large behind-the-meter battery installations, and we're going to be working to attract private capital with Scale Microgrids to bring more financing to these projects to enable them to be put on the grid, and as Ed noted, to help reduce peak demand at critical points so that all of our ratepayers benefit from electricity price reductions from the dispatch of those systems. Scale Microgrids also, for those of you who are following here in Connecticut, is part of a thermal loop project in Bridgeport, which will take waste heat from a large fuel cell farm, high axiom fuel cells that are manufactured here in Connecticut, and distribute waste heat efficiently throughout Bridgeport. So we're excited to be working with Scale Microgrids on projects there. One last slide, Ed, excuse me, Rudy, let's go to the last slide. Just a few, I talked about this last quarter, but we are now midway into legislative session. So I just kind of wanted to note at a high level that not only is the Green Bank a creature of statute, as I noted, we were created by an act of legislation in 2011, but we continuously support the implementation of various other policies. Elise was noting, and Rudy were noting, our Smarty Loan and CPACE programs and the inclusion of climate adaptation and resilience, which really is a foundation of Governor Lamont's Public Act 21-115, which passed in 2021, that expanded the Green Bank scope beyond clean energy to include environmental infrastructure. So we are happy to be working with the governor again to support his bill, Senate Bill 9, to increase investment in resilience. I think last time we talked, the bill was 1245. It's since been moved to SB 9, but the idea that we could enable resilient improvement districts to enable and unlock more financing through benefit assessments, like Elise talked about through CPACE. Think about it as neighborhood citywide CPACE. Is one way of thinking about it. We're excited to be working with the governor and his team to advance that policy. Of course, secondly, in affordable housing, our team is working really hard on financing products that are going to support Section 2 of Public Act 2148, that are going to unlock energy savings for tenants who reside in multifamily affordable housing. So we've got a lot of projects beginning to get into the construction stage, and hopefully by the end of the year delivering savings to those tenants and families. And then of course lastly is Public Act 22-25, which set a goal of 100% electric school buses in environmental justice communities by 2030. We've got a few projects in the pipeline here that are also GGRF, NCIF, Coalition for Green Capital projects here in the pipeline. Stay tuned for those projects coming through our board in the coming months. So I just wanted to end here by saying we are halfway into our legislative session. We are steadfast in implementing historical pieces of legislation and supporting new pieces of legislation as the state and its legislators and the governor work to advance benefits to our citizens and businesses. With that, Rudy, we'll turn it back to you for any questions that have come.
Thank you, Brian. Yes, so we have gotten a few questions come through. While we start this, if other questions are on your mind, please drop them into the question box, and we'll do our best in the next 10 minutes to get some of these answered. The first couple are going to be for you, Ed, so get ready. The first one, do you envision the Energy Storage Solutions program including EV bidirectional battery charging? And if so, what do you think the timeline is on that?
That's a great question. You kind of reading our minds. So we've been told by Pura in the past to specifically exclude those technologies from the program, but we are now considering putting together an ask to allow electric vehicles for the active portion of the program. So not necessarily for upfront incentives and passive dispatch, but we do plan for this annual review season to put in to try to make the case to PURA that we would like to allow them in the program. So we would expect a ruling on that, after all is said and done through technical meetings and all by the end of this year, so sometime in December. And that would be hypothetically for the 2026 season enrollment.
Great. Thank you, Ed. Another energy storage solutions related question. Is there a website where people can check and confirm enrollment in the program, or for contractors to check that?
So if a customer, like an individual battery owner or a contractor wants to check on an individual customer's enrollment, they would have to reach out to us directly. So they can do that at energystorage@ctgreenbank.com, and they can just give us the customer's information, name and address, and we can either look them up to see if we have their application or if there's anything that's needed to complete their enrollment.
Perfect. All right, so reach out to the Energy Storage Solutions team if you have questions about enrollment or confirming enrollment. Couple of questions for you, Elise, on CPACE. First off, how many towns have been approved for CPACE financing? It's not a test of how many you know, but it may actually be easier to say how many haven't.
Yeah, we are, oh goodness, we're at 141 towns that have opted in to participate in the program. That's 141 out of 169. So almost all the way there. In terms of the number of towns that have had projects closed, I do not know that off the top of my head, but happy to follow up with that number. But yeah, we are happy to say that most of the towns in Connecticut are participating in the CPACE program at this point.
Yeah, and we can send out a link to, there are links on our pages on our website that have those lists of which towns are participating. And I'll say if you're in a town that isn't, we'd be happy to try to engage with them to encourage them to join too, right, Elise?
Absolutely. Yeah, no, absolutely. Most towns that haven't joined are simply, some of the smaller towns that maybe don't have a lot of commercial properties. So those are typically the ones that haven't joined us yet, but absolutely happy to engage with any town that is interested in joining. It's really a pretty simple process. We just need the legislative body in the town, which is typically a town meeting, to vote on allowing their commercial or nonprofit property owners in the town to participate. So pretty low bar. We're happy to work with anybody on that.
Perfect. One other CPACE related question here. Is there a way to make payments via solar credit that an entity may have accrued through their local utility? Or are there situations where solar credits may be an applicable form of payment?
That's a great question. And the answer is unfortunately not directly as it's set up right now. But indirectly, yes, that's exactly the idea, is that the savings that you're seeing through those solar projects, and by savings, I'm including the revenue that you're also getting. So essentially, any of those incentives, any of the tax credits or the depreciation that you may be getting, or if you're a nonprofit, the direct pay of the ITC, all of those things are coming through as revenue, which get counted towards the savings, essentially offsetting, what you would be paying otherwise. So while there's no way to directly pay for your CPACE assessment through those, it is kind of an indirect way for you to make those payments, is, you know, through those revenues that you're getting.
Perfect. One final CPACE question. Does
Sure.
CPACE work for new buildings?
Yes, it does indeed. CPACE works for new buildings. We also can do help to finance new construction projects that are including energy efficiency or renewable energy upgrades or resilience upgrades to their business. It's a little bit different than kind of the traditional retrofit style of the program that we have, but absolutely available to new buildings and for new construction.
Perfect. There was another actually question for you, Ed, about energy storage solutions. If a homeowner has existing solar panels with no battery backup, can this program help the customer with the batteries, even though the system may not have been set up for that originally?
Yes. So our incentives are available regardless of whether the customer has PV, whether they're installing it at the same time or it was already installed. However, with adding a battery to an existing PV system, we found that some installers are more hesitant to work on those projects just because of the age of the equipment that may already be there. So that we recommend the first step is to talk to the installer who installed your solar PV system and ask if they do batteries. If they don't, we're happy to get them eligible in the program. So that's generally the best first step. If you've leased your solar panels, it can unfortunately be a little bit tricky from there.
Okay. Thank you, Ed. So we're getting close to time. I'm just going to ask this last question. I'm going to put this one out there in case Ed or Brian, you want to put in some thoughts on it, but I'll read the question off and then give my thought first, and then if others have a thought. The asker says that they have solar covering their roof currently, but no more room to add any more panels. They're still heating the home and hot water with natural gas. Is it worth it for them to convert to a heat pump, even though that they would have to now buy electricity from the grid? And what I'll offer is that there is a member of our team here named Bill Colonis, who his role is homeowner outreach, and he would be more than happy to discuss anyone's specific situations at their home directly. He's doing that consistently, whether it's at an Earth Day event or direct one-on-one homeowner questions like that. So please feel free to reach out to us directly with any of those type of questions. I don't know, Ed or Brian, if you want to pitch in a thought on
You say talk to Bill.
Yeah, that's
The only,
probably
the only thing I would add, Rudy, to that are two things. One is that this individual is thinking about the economics of solar, that it's cheaper than natural gas. So great, you're seeing that crossover from electricity to fuels. And the second is that our colleagues at the Conservation and Load Management Fund, which is administered by the two utilities, have great incentives when it comes to heat pump water heaters. So take a look at that. I also think there are some federal tax credits for it. So Rudy, maybe we include our IRA tax credit worksheet or fact sheet for folks to take a look at, because there's some pretty good heat pump tax credits, at least today.
Yeah, perfect. Great idea. We will include that in our follow-up message to everyone. I know there were a couple questions that we didn't get to. I apologize for that. We are out of time, but we will do our best to follow up with those questions directly outside of this meeting. But again, thank you all for joining us today. We will send out a follow-up email with the link to the recording and some other resources. Appreciate all of your time. And we will have another one of these next quarter. So keep looking out for messages from us and reach out if you need anything from us in the meantime. Thank you all.